action. We have Sudeep Pharma's IPO, which opens for subscription today. We have with us Shanil, Sujit, Bhayani, who's the promoter and the whole-time director at Sudeep Pharma, joining in. Shanil, hi. Thank you very much for taking the time out. Well, it's an interesting company considering that you do not have any listed peers. So just take us through a brief in terms of what kind of market share you have in the excipients market when it comes to pharmaceuticals as well as human nutrition, and why exactly do you not have any comparable peer in the Indian market?
Firstly, thank you very much for having me on the show. So Sudeep, we typically operate we're a mineral-based pharmaceutical excipient and nutritional ingredients company. And our competitive edge or the advantage is the technologies that we have, which are proprietary in nature, dominated historically by American and European companies. Apart from that, it is the regulatory approvals that we hold, again, where we are the only company in India to have these product regulatory approvals. And that is what gives Sudeep the competitive advantage, and which is why also, we don't have any direct competitors in India. Talking about the market share, in India, we would be the largest in terms of in the product categories that we operate in. However, we do face competition typically from imports that are coming from US and Europe.
Okay, just give us a sense, in terms of what your key products are, because we do understand that you have iron phosphate, which is something that goes into the human nutrition, the infant nutrition segment as well, and that seems to be quite a niche market for you all, especially in the Indian context. So just tell us how much do you get in terms of iron phosphate, in terms of total sales, and which are your key clients, how much of it is repeat business, and what kind of market share do you have in India when it comes to iron phosphate?
Sure. So I think overall, if you see the business, it's split in two verticals. So 2/3 of our revenue comes from what we call pharmaceutical, food and nutrition. 2/3 and 1/3 comes from specialty ingredients. Infant nutrition is a key focus area for us. And, we have Danone as one of our customers. Again, they're a global relationship that we have. And our expertise there is delivering very high purity minerals into this category. Again, for iron phosphate, today we are the largest iron phosphate manufacturer in Asia. And in India, we would probably be close to 50 to 60% market share in India today for iron phosphate.
Right. Just from a numbers standpoint, I wanted to understand your revenue growth has been not too much. From 430 crores in FY23, it's gone all the way up to 500 crores. So not like a multiplier growth that we've seen, but there has been steady compounding. But there too, the margins have been fairly volatile. At one point, they were 20%. At one point, they were 40%. Last year, they were 36%. So what's a sustainable growth trajectory that one should assume for a business like yours when it comes to revenue as well as margins?
Sure. So I think on the revenue front, we have our core plant, which was operating close to optimum utilization, and we have an upcoming greenfield which will be ready end of this financial year, when we'll add 50,000 tons to our overall pharma food nutrition capacity, and that will be a significant growth driver in the coming few years. Overall, we've had some ASP correction that had happened post-COVID. So while the revenue growth is maybe single digit, there has been significant or much stronger volume growth for the business. And from a margin perspective, as you see, the specialty ingredients business vertical, which is today a third in revenue, was started 3 years back and has grown at a 30% CAGR, I think, with a very strong margin profile. And we expect that business vertical to continue sustaining the historical growth that we've had over the past couple of years. So all in all, I think we are, and including the acquisition that we've done overseas. So I think that will get consolidated this year. We have a lot of momentum for that category as well, as it brings us closer to the infant nutrition market.
So on a full capacity basis, what is the potential revenue that the company can do?
I think today you see that we are close to 50% utilization on the current 50 to 70,000 tons of capacity. We'll have 50,000 tons of capacity coming live later this year. So it will bring us to just over around 1.1 lakh tons. And with the ASPs being within the similar range, I think there is, we possibly we can.
For the revenues to grow 3x, 4x from here on.
Correct.
Just wanted to understand, Sudeep, a lot of your revenues, in fact, come in from repeat orders. So just give us a sense in terms of the kind of clients that you have, where you're getting repeat business from, and how much of your sales actually come in from repeat business.
Sure. So I think close to just over 80% or 83% to be specific comes from repeat customers. And that's because our products play a critical role in the customer's end product. Typically, it's a 3 to 5 year approval cycle, and not too many competitors, not too many suppliers. So once you go through the entire approval cycle, then the business is fairly stable and sticky in nature.
Sure. Also, what about in terms of the breakup or the division that we'll see going forward in terms of your mix, right? How do you see that changing between both the segments in the next couple of years? And also geography-wise, which are our main focus geographies now?
So I think from a revenue mix, specialty ingredients will continue to be a key growth driver. I think couple of years it will become close to a 50-50 split. As this category continues to grow. And from a geography perspective, again, US and Europe are key focus areas for us. We've established our sales team in both these countries, including warehousing capabilities very recently. And that should also help fast track the growth in these two markets.
Okay, just quickly, Shanil, before we let you go, how many manufacturing facilities do you have? How many are, say, US FDA as well as European regulatory approvals? How many of them have those approvals? And is it necessary for your business?
So we have a total of 5 sites, 4 in India, 1 in Ireland now through the acquisition. Two sites in India are US FDA audited and approved. It is not mandatory as we are an inactive ingredients company. However, having that approval helps significantly for the exports to US.
And you get clients also auditing your sites?
Absolutely.
Okay. All right, Shanil, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Sudeep Pharma. They're looking to raise around 895 odd crores. 800 odd crores will be via an OFS, where the promoters, in fact, will be reducing their stake in the company from around 90 odd percent to around 77 odd percent. And the remaining will be 95 odd crores, which will be a fresh issue. The price band is 563 to 593. They did raise money via private equity just some time ago, and that was at around 562 odd rupees. We'll take a short break, but up next we have Ajit Kumar of JM Financial Securities joining in from the JM Financial India Exchange 2025 conference. Stay tuned for that.